So there's an ongoing debate as to whether or not we are in a recession. And the definition of a recession is 2 consecutive quarters of negative GDP growth. And considering the recent job data added 528,000 jobs in the month of July, and the unemployment rate ticked down to 3.5%, it's unlikely that we are in a recession as of Q3 2022. But let's leave that debate aside. This video is going to address 3 questions. 1, why all the confusion surrounding this? 2, does a recession equal negative stock market performance? 3, can a recession actually be helpful? So let's hit the first question, why all the confusion? So I would suggest that we're not going to know until we have roughly 6 to 12 months of post-COVID data. And why is that? Well, because the data we're seeing now is just after the post-COVID lockdown. Interest rates were down at 1.3%. They're now normalized at 3.5%. That will have an impact. Manufacturing needs to be normalized, right? Factories weren't going. People couldn't get into the factories generally. Now they are. There's demand. It's going to put upward pressure on prices. Our shipping ports have normalized. Right? Remember, there were ships out in the ocean. They couldn't get to the ports. Now they're starting to be unwound. Energy prices are also being normalized. Remember, we used to get 2 weeks to the gallon. Now we're certainly driving a lot more. The second question, does a recession equal negative stock market performance? And the answer is not necessarily. Stock markets have generally returned about a 3.5% return during the last 11 recessions since 1948. And if you take out the 2007, 2008 performance, which was a negative 24%, keep in mind that was a healthier correction. Why? Because we went from 1,000 to 5,000 in the previous number of years on the NASDAQ, and then the subsequent unwind was quite painful. So keep in mind, market corrections are normal. They're healthy. They happen every 6 months to a year of varying sizes, sometimes 10%. Keep in mind, if they coincide with a recession, terrific. If not, that's fine. And not that, by the way, not that they're easy to go through. I appreciate that they're not easy to go through, and I appreciate that it's not easy to look at a statement that is less than optimistic. Keep in mind, the S&P is down 10% this year. The NASDAQ down 20%. The 20-year Treasury is down roughly the same as the NASDAQ. So assuming we are in a recession, it's likely that the market has discounted it. But can a recession be helpful? The answer is, in business, absolutely. By the way, not to think that job loss isn't painful. And to someone who has lost a job in a recession, to them, it very well might look like a depression. But from a restructuring standpoint, rebalances normalize employment structures, interest rates, input costs, commodity costs. It resets interest rates. It ends the misallocation of investment capital. And companies that are inefficient or are mismanaged tend to go away in a recession. So in the summary here, we won't know we're in a recession until all the data normalizes, at which point we'll likely be through the recession anyway. Recessions don't necessarily point to poor market performance. The data shows, frankly, otherwise. And 3, I'd love it if we could reframe this issue from whether or not we are in a recession to, can a recession actually help your personal economy, and is it functioning for you? Of course, this may lead to some questions, so please feel free to reach out to us through our website at samalinwealth.com, or you can feel free to call us at 914-666-6600. And thank you for watching.